What's up guys and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. Today we're bringing back our old series where we go over some of the biggest gains and losses on the Wall Street Bets forum so we can learn from other traders' experiences. In the current market environment, it's easy to lose money, and sometimes it can feel like you're the only one losing your shirt. So today we're going to see how some traders are handling their near total losses, and how other people are trying to take advantage of the bear market of the past 6 months. But before we dive in, make sure you're signed up to our daily newsletter at wallstreetmillennial.com/newsletter. It's delivered straight to your email inbox at 5 AM every morning of the trading week, and has everything you need to know before taking on the day. For example, after the May CPI report was released on June 10th, in the very next newsletter we broke down the report, what was in it, and what its implications are for the Fed and for stocks. In just a few minutes you can prepare yourself with all the market due diligence that we do for you. And the best part is, it's completely free. Go to wallstreetmillennial.com/newsletter to put your email on the mailing list and start receiving the newsletter today. Remember that this video is not financial advice and is for entertainment purposes only. Make sure to do your own research and consult with a professional before making any investment decision. Let's dive straight into a massive YOLO by user Bobby V. This Wall Street Bets trader went all in on Amazon calls. Specifically, he bought $17,000 worth of $4,000 strike calls with an expiration date of September 16th of this year. Amazon did a 20-for-1 stock split since this trade, so adjusting for the split, the calls have a strike price of $200, close to double the current price of $109 per share. Amazon is one of the more hammered of the tech stocks of the current market sell-off, down more than 35% since the beginning of the year. So why did Bobby V go all in betting on a reversal? He listed several reasons. A. The stock split. When Tesla announced the stock split in August of 2020, the stock went up massively. B. He thinks that the company is poised to beat expectations during earnings. Analyst downgrades, combined with Mother's Day and people getting their tax return refunds, in his opinion sets Amazon up to beat expectations. And finally, analysts are bullish on the stock, and he says that the technical chart indicators are also signaling that the stock has bottomed. These reasons were enough for him to go all in and withdraw $17,000 from his savings account and put them into these out-of-the-money calls. That was 1 month ago, on May 12th. So how has the position done since then? Adjusting for the stock split, his $200 strike calls were purchased for 14 cents each. Now those same calls are trading between 6 cents and 10 cents. If he were to liquidate all of those calls at the best available sell price, he would be booking a 57% loss, or about $10,000 of his $17,000 investment. The worst part is, Amazon stock is actually up slightly during that same time, because he bought at a dip. And yet those calls are down more than half their value. This just goes to show that making a profit on an option trade is harder than making money on a stock trade, especially for out-of-the-money options. Not only does the underlying stock have to go up, it has to go up fast enough to cancel out the theta decay associated with options. This particular options trade still does have 3 months before those calls expire, so there is still hope. If Amazon stock can nearly double to $200 per share by September, he could still make money. Best of luck. Next up we have another options YOLO, this time on Tesla calls. On May 9th, this trader put $12,000 into Tesla calls, expiring just 11 days later on May 20th. The strike price on the calls was $915. At the time, Tesla was trading at around $787 per share, putting the calls 16% out of the money. This trader was basically betting that Tesla would rally at least 16% within a week and a half, otherwise they'd lose their entire $12,000 investment. Unfortunately, Tesla did the opposite of going up. On the day of the post, the call position lost more than half its value, or $7,000. On the expiration date, Tesla stock was at $696 per share. Assuming that the trader did not hedge or close a position during that time, they would have eaten a total loss on the YOLO. The comments section immediately questioned the logic of the trade. User KingSavage101 said, quote, "Why would you buy a call at this point in time?" unquote. A comment which was upvoted 128 times by other users. Another commenter said that he doesn't understand why people try to catch a falling knife in a bear market. He thinks a better trade would be to buy puts when the market has strong negative momentum, rather than trying to time the reversal. Based on the upvotes of these comments, it seems like most people on the forum agree. Next we have the bipolar investor, who already knew that they were going to lose money. The play was $10,000 worth of calls on Oracle with various strike prices but all out of the money. Oracle is another one of the hardest hit tech stocks since the beginning of this year, down by about a third of its value. In a single day, this trader already lost 25% on the options. The one saving grace is that the expiration date is not until September, so there's still several months to make back the losses. This one actually generates some sympathy in the comments section. User Dan in Kuwait says, quote, "We'll be laughing with you," unquote. In a market where everything is going down, it's safe to say that this loss could have been anyone's. User Solid Epic says, "Looks like it's time to borrow more money." It's a common behavior for traders to buy more of a stock or an option when a position goes down, and when there's no more money left to buy with, use margin to buy more. While this strategy has the potential to set you up for outsized gains on a bounce, it's also extremely risky due to margin calls. Good luck making back those losses. Let's take a look at one more loss, this one by user Beneficial Line. This trader is down 50% on a $10,000 portfolio in the span of just a couple months. He did not disclose what his positions were, possibly due to embarrassment, but they reasonably could have been any number of different stocks. He says that he did not use any leverage to get these losses though, so it was probably either tech or small cap stocks. On the bright side, while a 50% loss is always tough to swallow, the $5,000 absolute loss is comparatively small. In comparison, one commenter said that he put all of his savings, $80,000 worth, into a trade that ended up going to $12,000. That would be a $67,000 loss. Another commenter says that he once put $6,000 into a penny stock at $1.10 per share, only for it to go to 8 cents per share. That would be a nearly 95% loss. So no matter how much money you lose on a trade, there's always someone who either lost even more money or had a bigger percentage loss. Better luck next time. Now let's switch gears with a massive $500,000 two-day gain on an option trade. User Sandeep4386 was all in on SPY puts ahead of the June 10th CPI report, which confirmed the market's fears that inflation was only accelerating through the previous month. On the day before the report was released, the S&P sold off by more than 2%, and then dropped another 3% right after the report was released on Friday. The puts expired that same Friday, and went from slightly out of the money to significantly in the money, enabling a more than 1,500% gain on the puts. In his post, he says that he first started doing FD option trades 2 years ago when Wall Street bets was first blowing up. He repeatedly lost money by buying puts while the stock market rallied after the COVID crash. But finally, his bearish bets paid off, and he has now made back all of his losses and more. He says that he finally has reached his goal of having $1 million account value now. He also says that now that he has made it, he is quitting the Yolo game and will just own stocks, and possibly sell a couple options in the future. Many commenters congratulate him on his gains, which prove that although doing options YOLOs is very risky and oftentimes ends in losses, they have the potential to bring huge gains in a very short period of time. This is what many options traders on the forum are looking for. After many losses on failed trades, the hope of one whale of a trade that hopefully makes back all the previous losses, plus a little extra. Let's wrap things up with yet another massive gain on a put YOLO. User Gamoria798 went all in on at-the-money Tesla puts one day till expiry. The average cost was less than $10 per option, and at the time of the screenshot was at over $27 per option. With a strike price of $735 and Tesla closing at the expiration date at about $697 per share, those puts expired worth about $40 each. Assuming that this trader held till expiry, they would have booked a more than $21,000 gain off a $7,000 investment in less than 2 days. Even before waiting until the expiration date, the trader's Robinhood account rose from just $12,000 to above $27,000 in a single week. Because those Tesla puts brought his account balance above $25,000, the OP credits Tesla puts in general for unlocking unlimited day trades for him. While it is nice to see someone making money in a down market, and it feels good to see some option YOLO wins, it's also important to realize that these gains could have easily been losses. One commenter warns that in order to make these gains, the OP had to risk 50% of his portfolio value on one day till expiry options that could have easily expired worthless. If the market had just gone the other way, which it easily might have, we could be looking at a very different story. Congratulations on your massive gain. Alright guys, that wraps it up for this video. If you have any gains or losses to share, let us know about them in the comments section below. Also, make sure you're subscribed to our newsletter by signing up at wallstreetmillennial.com/newsletter, and also check out our podcast on Spotify or Apple Podcasts. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.